Welcome to the Deep Dive. Today, we're unpacking a topic that's really making waves in the Solana ecosystem. We're talking about Jito and its liquid staking token, Jito.
That's right.
You sent over some great stuff, tech docs, some pretty lively Reddit threads. And yeah, our mission today is basically to figure out what Jito is, how it changes the staking game, and why this whole approach to MEV is such a big deal for Solana.
Exactly. It's fascinating, really. I will look at how Jito is trying to democratize access to this value, this maximal extractable value, or MEV,
right,
and bridge that with liquid staking. So yeah, we'll dig into the differences between, traditional staking and Jito Sol, get into the weeds on MEV, and look at the benefits, but also the risks for anyone thinking about using this protocol. It's really about tackling some long-standing efficiency problems on the blockchain.
Okay, so let's start there. Foundational question.
Yeah.
Staking, we kind of know what it is, but what's the fundamental difference between doing native SOL staking versus using something like Jito Sol? Why make that choice?
Yeah, that's the key starting point, really. Native staking on Solana at its core is about locking up your SOL with a validator. You help secure the network, you earn rewards.
Simple enough.
And its main advantage is security, right? No smart contracts involved, generally considered the safest route. But there's a catch.
Always a catch.
Your SOL is locked. It's tied up for an epoch, which is usually 2 or 3 days, both for staking it initially, the warm-up, and for unstaking it, the cool-down. So it's illiquid during that time.
Got it. So you earn, but you can't touch it immediately.
Oh.
Jito Sol comes in to fix that locked-up problem.
Precisely. Jito Sol is what we call a liquid staking derivative. Instead of locking your SOL directly, you essentially swap it for Jito Sol.
Okay.
This Jito Sol token then represents your stake SOL plus all the rewards it's earning. But the crucial difference, it stays liquid. No warm-up, no cooldown periods.
Wow. Right.
And instead of getting like little reward payments stripped into your wallet, the actual value of your Jito Sol token increases over time compared to SOL. It just appreciates.
So the token itself becomes worth more SOL.
Exactly. Which, interestingly, can also have different tax implications depending on where you are. Something to keep in mind.
That is a huge difference. No waiting period. So you can use your Jito Sol in other places while it's still technically earning those staking rewards. It sounds like having your cake and eating it too.
That's pretty much the core value proposition, yeah. You keep that liquidity, which opens up all sorts of DeFi possibilities we can talk about.
But there must be a trade-off.
Well, yes. And it's an important one. Because liquid staking involves smart contracts to manage the pool and the token, there's inherent smart contract risk. That's something users absolutely need to be aware of. It's not quite the same security profile as native staking.
Right, the smart contract risk, always a factor in DeFi. Okay, now let's get to the really juicy part you mentioned, MEV, Maximal Extractable Value. It sounds kind of dark artsy, like a hidden blockchain treasure hunt. What actually is it, and why is Jito focusing so hard on it for Solana?
It's a fascinating concept, MEV. Basically, it's the profit that can be extracted by whoever gets to decide the order of transactions within a block, or which ones get included or excluded.
So the validators in Solana's case.
Exactly. In proof of stake, it's mainly validators and block producers. It used to be minor extractable value back in the proof of work days. It's kind of an incentive mechanism, but like you said, it has a double-edged sword.
A double-edged sword.
Yeah.
How so? Are we talking good MEV versus bad MEV?
You've got it. There's good MEV things like arbitrage, where someone profits by balancing prices between different exchanges, or liquidations in lending protocols. These things actually help the market function better, more efficiently.
Okay, that makes sense. Healthy market activity.
But then there's the bad MEV, and this is where it gets problematic. We're talking front-running, back-running, sandwich attacks.
Sandwich attacks. Sounds unpleasant.
It is. It's where someone sees your transaction pending, say, a big buy order on a DX, and they quickly place a buy order right before yours to push the price up, then sell right after your trade executes, profiting from the price movement they caused at your expense.
Ugh. Yeah, that feels like getting ripped off.
It undermines trust, for sure. And you mentioned that recent DOJ case against those brothers that really highlights the potential for abuse when MEV isn't managed well. Millions allegedly extracted fraudulently. It's serious stuff.
Wow. And Solana, Being so fast and cheap, does that make it like a playground for this stuff?
That's a critical point, yes. Solana's high speed and super low transaction fees are generally great, right? But it also means it's very cheap for MEV actors, these searchers, to just spam the network with thousands, even millions of attempts to find profitable arbitrage or other opportunities.
Just throwing darts hoping one hits.
Pretty much. Jito actually did an analysis back in 2023 and found something like only 2% of these attempts were even successful. But the big problem for regular users is all those failed attempts still clog up the blocks. They waste network resources, and they can push out or delay your perfectly normal, legitimate transaction.
As it affects everyone, even if you're not directly targeted by a sandwich attack, your transaction might just get dropped because the block is full of MEV spam.
Exactly. It impacts network performance and fairness for everybody.
Okay, so Jito saw this mess on Solana and said, we can do better. How does their system actually work? How do they make MEV fairer and more efficient?
So Jito's big innovation is their custom validator client called Jito Solana. It's basically a modified version of the standard Solana software, but optimized for MEV. And it's been hugely adopted, like over 90% of Solana stake uses it now.
90%? Wow. Okay, so what does this client do differently? You mentioned bundles, block engines.
Right. It introduces a few key parts. First, bundles. A bundle is a set of up to 5 transactions that get submitted together. The crucial part is they have atomic execution. Meaning either all the transactions in that bundle succeed or they all fail together. No partial executions. And users or searchers can attach tips to these bundles to incentivize validators to include them.
Okay, like a priority fee for the whole package deal.
Exactly. Then there's the block engine. Think of it like an off-chain auction house. It simulates all the incoming bundles, figures out which ones are actually compatible and profitable, and selects the highest paying valid combinations.
So it filters out the spam before it hits the main network.
Precisely. It optimizes block space by only forwarding the winning profitable bundles. And the third piece is the relayer. This is basically a separate server that handles all this filtering and auctioning so the validators themselves can just focus on, actually producing blocks without getting swamped by all the MEV traffic.
Okay, that sounds way more organized. Instead of a chaotic free-for-all, Jito creates this structured marketplace for MEV. And profits from those tips and successful MEV bundles, they get shared back.
Yes. That's the really groundbreaking part for users. Jito fundamentally changes how MEV profits are distributed. Validators running the Jito client share a portion of that MEV revenue they capture with the Jito Sol stake pool.
So as a Jito Sol holder,
you're not just earning the base staking rewards, that sort of 4-6% APY range. You're also getting a slice of those MEV profits captured by the validators in the pool. This boosts your overall yield. Some sources were suggesting it pushes it over 7% APY.
And that's built into the Jito Sol token's value increase we talked about.
Correct. It all compounds automatically into the value of Jito Sol relative to SOL. You don't see separate MEV reward deposits. The token just becomes worth more SOL over time because those rewards are constantly being added to the underlying pool. Jito Sol was actually the first LST on Solana to do this MEV redistribution.
That is brilliant. An automatic compounding boost. Beyond just higher yield, are there other practical benefits for someone actually using dApps on Solana?
Oh, definitely. For active DeFi users or even developers, Jito offers some real advantages. That atomic execution in bundles means complex multi-step transactions become fail-proof. Think about swaps that involve multiple steps that either all work or none do.
Reduces risk there.
Big time. You also get better transaction ordering possibilities, which is super important for things like high-frequency trading strategies. And because Jito can run these bundle auctions in parallel for different parts of a block, it can even lead to lower latency sometimes. Plus, a big one, MEV protection.
How does it protect you?
By creating this formal auction system for bundles, it makes it much harder and less profitable for those malicious actors to execute things like sandwich attacks or front-running against users who are interacting via the Jito infrastructure. So you get prioritization and some protection.
Okay, this sounds really compelling. So if listeners are thinking, all right, I want to try this, what's the process? How do you actually get Jito Sol?
It's designed to be pretty straightforward. First step, you need a Solana wallet, like Phantom, Solflare, something like that. Make sure it's got some SOL in it for the amount you want to stake, plus a tiny bit extra, like maybe ins 0.01 SOL for transaction fees.
Standard Solana stuff. Even hardware wallets work.
Yep. You can use things like Ledger through the browser extension. So you get your wallet ready. Then you head over to Jito's official staking platform, which is Jito Network staking.
Okay. connect the wallet there.
Right, connect your wallet. And then you've got a few ways to get JitoSol. The method they usually recommend is direct mint.
Direct mint.
Yeah, you just put in how much SOL you want to convert, and it uses the main stake pool contract to mint JitoSol for you directly. The advantage is there's no price slippage. You get the exact current ratio.
What are the other options?
You could also just swap SOL for JitoSol on a DeedX aggregator like Jupiter. Or if you already have SOL staked natively, or maybe you hold other tokens like USDC or even another LST like MSOL, you can often convert those directly into JitoSol through their interface too.
Okay, so several paths in. And once you have that JitoSol sitting in your wallet, the liquid part means you don't just have to let it sit there.
Right.
You mentioned using it in DeFi. We saw Camino and MarginFi mentioned in the sources.
Exactly. This is where it gets really interesting for yield generation. Option 1, just hold JitoS, let its value appreciate from staking and MEV rewards. Simple.
The passive approach.
Right. Option 2, take that JitoSol and put it to work elsewhere. A really common strategy is providing liquidity. You pair your JitoSol with SOL usually in a liquidity pool on a platform like Camino. Camino's huge on Solana, second only to Jito and TVL actually.
And what's the benefit of doing that?
You earn extra yield on top of the JitoSol appreciation. You get trading fees from the pool, potentially extra Jito token incentives if they're running programs. And sometimes you might even passively qualify for airdrops from that platform, like maybe Meteor uses Camino pools.
So stacking yields, that's the DeFi dream, isn't it? I saw one user mention earning about 2 SOL for every 30 SOL they put into JitoSol over 3 months. That's pretty specific, but gives an idea of potential returns.
Yeah, those kinds of specific returns can happen, but obviously very wildly with market conditions, MEV rewards, incentive programs. But it shows the potential. Another thing people do is lend their JitoSol on platforms like MarginFi to earn borrowing interest.
More yield stacking. Okay, but we have to talk risks again. Stacking yields often means stacking risks, right? What should people be really careful about here?
Absolutely crucial point. Due diligence is key. First, remember that anytime you put your assets into a DeFi protocol, whether it's a liquidity pool or a lending platform, you're taking on smart contract risk specific to that protocol on top of the JitoSol contract risk itself.
Layers of risk.
Exactly. If you're doing liquidity pools, it's smart to check the current ratio of SOL to JitoSol in the pool and maybe set your slippage tolerance low, like 0.1% maximum when depositing. This can save you from getting a bad rate if the pool is unbalanced.
Good practical tip.
And unfortunately, scams are always a risk in crypto. Double, triple check you are interacting with the real JitoSol token contract and the official Jito website or integrated platforms. There have been instances of fake Jito-staked SOL tokens trying to trick people. Always verify.
Verify, verify, verify. Got it. Okay, shifting gears slightly. Beyond JitoSol, the staking token, there's also JTO, the governance token. This gives holders a say, right? What kind of power does the JTO token actually give people?
Yeah, JTO is all about governance. It empowers holders to participate in the Jito DAO, the decentralized autonomous organization.
So community control.
Essentially, yes. Holding JTO lets you vote on really important decisions about the Jito Network's future. Things like setting the fees for the JitoSol stake pool itself, changing the strategies for how the pool's SOL gets delegated to different validators. That's their StakeNet program managing parameters for the MEV tip distribution network. And, critically, controlling the DAO's treasury, which holds JTO tokens and accumulates fees.
So it's not just one team making all the calls, it's meant to be decentralized.
That's the goal, to make sure the protocol evolves based on what the community, the token holders actually want and need.
How do they distribute these JTO tokens to try and make that happen, to ensure it's actually decentralized?
Well, there's a total supply of 1 billion JTO, a really significant chunk. Over a third, 34.3%, is allocated for community growth.
Okay.
10% of the total supply was already given out in a big retrospective airdrop to early users, JitoSol holders, validators running their client, MEV searchers who use their system, rewarding the pioneers.
Nice way to kickstart the community.
Exactly. The remaining 24.3% in that community growth pot is now under the control of the DAO itself for future initiatives decided by JTO voters. Other slices went to ecosystem development, 25%, core contributors like the team, 24.5%, and investors, 16.2%. Importantly, the team and investor tokens have vesting schedules, typically over 3 years with a 1-year cliff, so they can't just dump tokens immediately.
Standard vesting helps align long-term incentives, and there's a foundation too.
Yes, the Jito Foundation. It's led by independent directors and helps coordinate things, execute the decisions made by the DAO. It helps the network operate effectively at scale while still being guided by the token holders.
Seems like a pretty well thought out structure for growth and decentralization.
Yeah.
So zooming out, what does all this, the liquid staking, the MEV redistribution, the DAO, what does it all mean for Solana as a whole?
Well, if you connect it to the bigger picture, Jito's trying to make Solana better. The innovations in liquid staking make staking SOL more flexible and potentially more rewarding. The MEV approach aims to take something potentially problematic and turn it into a more transparent, fairly distributed source of yield, while also reducing network spam.
Making the network healthier overall.
That's the idea, a more robust, efficient, and fair network. That DAO treasury, for example, pulled in over $18 million between Q4 2024 and Q3 2025, just from JitoSol staking rewards and those MEV network tips. That money goes back into funding projects and initiatives within the Solana ecosystem.
Wow, that's significant funding.
It really is. And their roadmap suggests they want to expand these MEV-aware services into other parts of DeFi, like integrating with DXs and lending protocols more deeply. So they're trying to embed this efficiency and fairness deeper into the Solana ecosystem.
What a fascinating deep dive, seriously. Jito, JitoSol, MEV. It's complex, but we've unpacked how Jito offers this really unique way to stake SOL, giving you liquidity, adding that extra layer of MEV rewards, and trying to clean up the network all at once.
Absolutely. We've gone through the steps to get involved, the big benefits like that liquidity and the boosted yield, but also hit on those really important risks, smart contracts, DeFi complexities, market integrity, the whole picture.
And the governance piece with JTO, showing that commitment to letting the community steer the ship.
Which is crucial in this space, right? It really shows Jito is trying to solve tangible problems on Solana, creating new opportunities, but also grappling with the ethical and technical challenges that come with messing with something as fundamental as transaction ordering and value extraction.
It definitely feels like they're pushing the boundaries.
It does, and that actually brings up an interesting final thought, maybe something for you, the listener, to chew on. As we see more protocols like Jito finding new ways to extract and distribute value on blockchains, how do you think this ongoing balancing act between maximizing financial incentives, improving network efficiency, and maintaining genuine decentralization, how will that ultimately play out across the wider DeFi world?
That is definitely something to think about. A big thank you for joining us on this deep dive. We really hope this gave you a much clearer picture of Jito, JitoSol, and all the exciting and sometimes complicated stuff happening with liquid staking and MEV on Solana.